Doing well, doing well. Yourself?
Yeah, I'm good, thanks, buddy. I'm good. Are we ready to cook this morning? We're ready to cook.
Indeed ready, indeed ready.
Sounds good. Sounds good. So is Josh hopping on today, or are we waiting for?
Oh, you can start whenever you want. I think Josh is just wrapping up something right now, so I'll be in here for a little bit, and then when he joins in, we'll swap. There's a few calls today for us on the admin side.
Yeah, sure, no problem. Let's have a look. Where we are at the moment, this is inside my H1 to M5 model. It's freely available on YouTube. I have a mechanical TS model and I have a H1 to M5 model. I've built 8 models, and 2 of them are free on YouTube. One of them is the H1 to M5, which is essentially what it seems like half the world is trading this morning. Is essentially in alignment with my H1 to M5 model. An H1 to M5 model is very, very simple, and there's been literally 3 in 3 days. So if you study the H1 to M5 model, you've absolutely banked this week. If you literally just traded H1 to M5 models. The way it works is, with an H1 to M5 model, you're always looking for a sweep on an hourly candle, okay? So this inside of a discount is a sweep. And then you're looking for it to pull and close back above that sell side sweep. Okay, so once it sweeps and closes back above, your next step is as follows. You're going to look for an inefficiently delivered range on your M5 chart. Okay, so you're going to go to your M5 and you're going to find an inefficiently delivered range. An inefficiently delivered range is this high to this low. So essentially where price doesn't come back to 50% of this range. So this is inefficiently delivered. And then step 3 is you're going to look for an M5 BISI inside of a discount. Okay. And the way that you enter on it is you enter on consequential quotient or mean threshold, whatever you want to call it, of that M5 BISI. That's where you enter, and your stop has to go below the candle low which creates the M5 BISI. Now, if that stop is too wide for you, you just want to wait for your confluences on that low as to why that low is going to hold. And so for me, I teach triggers inside of Red Pill Uni, and there's ways that you can define how a low is going to hold. But ultimately, you're looking to enter on inside of mean threshold of the M5 BISI. So where we've all gone long inside of Red Pill trading this morning is literally right here to the very tick. Okay. Now, the final part of your H1 to M5 model is your dole. And so your dole is always the 15-minute high. Okay. If you're going to trade the H1 to M5 model, it is always your 15-minute high every single time. It's your 15-minute high. You've now got your entry, and you've got your final TP above your 15-minute high. That's the H1 to M5 model. So if we look up here on the top right, this is my hourly chart. And on the top left, we have my monthly, daily, and weekly. And then down here, the lower pane is my execution chart. So this is 15 down to 1, okay? And I'm stacking my XLevels across all those charts, okay? So if we just purely look from a higher time frame perspective of what has happened over, the past couple of weeks, we can get a very, very clear picture by utilizing XLevels. So XLevels is a price delivery framework. It allows you to get in alignment with the institutions, and it defines true premium and discount. And that's essentially how price moves between a premium and a discount, seeking inefficiencies and liquidities and price. Your job is to align your models and entries around those higher time frame points of interest in an alignment with a higher time frame X level. So if we look up here just purely on the principle of the higher time frame, and you can go down to lower time frame to find entries inside of this because time is fractal, but you can see on the weekly, this is our weekly dealing range. So this high and this low, and the X level indicator automatically populates these for you. And as they change, new highs, new lows put in, it will update your dealing range for you. So you don't actually have to do it anymore. It takes away the manual element. But you can see here we have this high and this low. So this is our weekly dealing range. If you flipped your weekly, which is this swing low, which put in this high that closed above a former high, is our weekly dealing range. We have a premium and we have a discount side of that weekly dealing range. A deep premium is 12%. So we left a monster premium on the weekly, and we've come all the way back down to monthly fair value. So our monthly dealing range is the same principle in terms of swing low, which puts in a new high that closes above a former high, which is this is our monthly. We have come back down to monthly fair value. Inside of here is where you can start dialing in entries. This is a higher time frame point of interest. It is where the institutions can step into the market, right? After a huge distribution from the weekly. Now we can go down even further. We can start going into our daily. dealing range, which is this swing high, which put in this low. So I now know that we have bounced off monthly fair value. Again, we've come all the way back down to a daily discount, which is down at 21% inside of a daily discount. With inside of that, if we go even lower, we've now got our hourly, right? So this is our hourly dealing range, this low and this high. And this is still valid until either that low gets broken or this high gets broken. We have pinged off monthly fair value. I know that we're in a daily discount. I know that we're inside of an hourly discount. So across the board, we are in a discount. Now, the principles of XLevels are super simple. You want to be going long in a higher time frame discount, and you want to be short in a premium. This is where you start dialing in your models. Like, there's absolutely no hope in hell that I would be looking to go short inside of a higher time frame discount. Just no chance. I'd be looking to find my models to trade price back into a premium and have supporting context for that, right? Right down at here at 62% on the hourly dealing range is a discount on the hourly. We're down at 21% on the daily, which again is a discount. So you've now got stacked confluences with your XLevels. Okay, so it's inside of here where you can start defining your models. Well, my model, as I've just taught you, is my H1 to M5 model, right? Bang off your entry inside of in an alignment with a PD rate in an alignment with a high time frame X level. Okay, and then all you're doing is submitting to time and price, and you're utilizing XLevels to then trade back through your range. Okay, what I mean by that is, okay, well, we have, and there's other things you can lay on top of this, guys. I'm just teaching you purely the principles of XLevels and how price moves. Like, this is undeniable. Once you witness it, you can't unsee it, I promise you. And you just overlay your context and everything else on top of it. Okay, it becomes so simple. So this is currently on my 5 minute, but if I flip to my 1 minute, this will all start to make sense. So we've got our higher time frame POI that we've just alluded to, which is, and we've got our model. Okay, so we've got our H1 to M5 model in alignment with a higher time frame discount plus other confluences which you can stack on top of that. Now, what we're looking for price to do is expand back out through the dealing ranges from our higher time frame point of interest. I will often call this a nucleus, higher time frame point of interest. What we are then looking to do from our nucleus, which is our higher time frame POI, is for price to expand back out through the dealing ranges. So this is how I look at it. Well, it's not how I look at it, it's how price moves. This would be your nucleus. So this would be your 62%. Okay, 62% on the hourly inside of the H1 to M5 model. What then happens is price moves back out through the dealing ranges, okay, seeking liquidity and inefficiencies in price. So this circle delineates a 1 minute dealing range. This circle delineates an M5, M15, H1 daily. In between, you have a inefficiencies and liquidity and a premium and a discount side of every single dealing range. And price will seek inefficiencies and liquidity as it moves between a premium and a discount. If I show you what that looks like in the charts, it's as follows. What we're now looking for is a break of structure on the 1 minute. If we take this low and this high, so we have a 1 minute dealing range. So from your high time frame point of interest, you're now anticipating price to range back out through the dealing ranges. So if we just hypothetically look at this as the circle, okay, and then we have another one which is here, purely for the principles of what I'm trying to show you. Every single dealing range has a premium and a discount side. I promise you, every single dealing range. When price leaves your POI, you want it to take out the 1 minute liquidity, okay, because you've got liquidity sat above that high. In between this high and this low, you have inefficiencies, SIBI, inefficiencies. Above this liquidity, so above the 1 minute DR and the 5 minute DR, you have inefficiencies. And above the 5 minute DR, you have liquidity. The price will move between a premium and a discount as it moves to your higher time frame POI, okay, whatever your POI is. And for me, it's to take out the 15 minute doll. From here, we have broken the one, we've gone up into a 5 minute. So what often happens at the 5 minute premium is you get offset accumulation, which is where price comes back into a discount of the 5 minute. If we put a box, just for argument's sake, over the premium side and the discount side of this 5 minute, you can see that price has literally gone from our nucleus, broken the 1, 5 minute deep premium, 88, all the way back down into a deep discount, 12. Me looking to hold runners to come and take out the 5 minute high and the 15 minute high. If you are trading, and the way that I trade is I'm super aggressive, so I'm a turtle soup trader, right off this low, which is what I'm currently long off, which is my model, to come and take out the 15 minute high. Now, the way that there's things which I teach inside of Red Pill in terms of how to confirm that low. But what I then do is I scale out of my positions. So what I do is, if I'm entering here, I'm simply using the principles of XLevels to scale out. So what I'm looking for one to go. So I'll trim. If I've taken like 15 contracts, I might trim 5 contracts here. Then I'm going to look inside of my premium for inefficiencies in an alignment with an X level to trim. Fill on this SIBI in alignment with 88. Trim, because I'm going to anticipate offset accumulation from the 5. And I have other models which you can trade from out of here. This is one of my models. It's just a straightforward discretionary model where essentially you wait for price to come back into a 5-minute premium, offset into a discount, find your PDRA inside of a discount, to then target the 5-minute high. It's basically one of my discretionary models. Okay, but scaling out. So scaling inside of 5. So inefficiencies, but what's after the inefficiencies? Liquidity. So you got liquidity sat here, and then you got liquidity sat up here. And so you can see prices moving from a premium to a discount, seeking inefficiencies in liquidity and price from our higher time frame POI. Now, on its own, okay, on its own, it's not enough. You have to have supporting context for why price is going to respect this low. And that's where you start overlaying your models and your other contexts. You need to get comfortable with the idea that XLevels is a price delivery framework. It gives you the levels in which you should be looking to dial in your PDRAs and your models. And then you overlay your supporting context over that to make it high probability. This is a prime example of that. Being inside of a deep ass discount, having a model stacked on top of it, which is my H1 to M5 model. And then once you're at your nucleus in alignment with a macro with other supporting context, now you're just looking to drive price back out through the dealing ranges, and you're submitting to time and price. And you're utilizing the principles of XLevels to do that. And you just trim as price goes back out through the dealing ranges. And those dealing ranges for me are as follows. I only use these time frames. I don't use any other time frame. So you've got your 15 seconds, you've got your M1, you've got your M5, you've got your M15, which is your bellwether. You've got your H1, you've got your daily, weekly, monthly. That is it. Okay, and price will literally just move between these. What you want to be mindful of, and why I trim, is as price moves back up through the dealing ranges, you're now coming into what is known as perceived risk, which is the idea that you're moving back into a higher time frame premium. I want to be entering my max positions inside of a discount, scaling out en route to a new higher time frame premium. Price gets back up to here on 50%, which is essentially going to take out this 15-minute dole. This would be a sensible place for me to have my lion's share of, right? We're back at a new higher time frame POI, which is fair value. That's how I do it. Now, there's other things we can stack on top of this. They come in the form of market profiles, which are also known as schematics, and various other things we can start overlaying on top. One of the things with a sell date, and this is me going off topic on XLevels for a moment, but just this is what I mean by supporting context, which gives you the confidence in your trade. Like, it's not good enough just to have a model. It's not good enough just to have a standard deviation extension target. You have to have the other supporting context. Even on a sell day, you'd anticipate a sweep pre-830. We've had no sweep pre-830, like diddly squat, none. Also, on a sell day, you'd have been anticipating price to at least get back up into 50% of the London dealing range. Like, we haven't done that either. So the idea of me being bearish with these supporting confluences rules that idea out entirely. So I'd only be looking for longs to trade in an alignment with a market profile, which is to sweep the market because it hasn't done it pre-830. That's just a supporting context as to why I'd anticipate higher prices. If anyone's got any questions, feel free to.
Don't be shy, everyone. Just wanted to say good morning as well to everyone I didn't get to. But wishing everybody well. Please don't be shy. Please be interactive. TradeX is here to communicate with you guys.
You do not consider time as a factor? Yeah, absolutely. No, of course I do, Rap. Like 100%. Time is a huge element. Is a fundamental part of a trigger of a buy program. Like, you always want to be around trading at a macro, but you also need to be mindful that you only get around between 3 and 4 macros a day that actually trigger a buy program or a sell program. So you just got to be mindful of that. It's not like a case of, oh, well, we're at a macro, let's yeet. All right, you got to align it with the confluence of the time in terms of your schematics, market profile, models, etc.
TradeX, we got a question over here for you. So, how do you take consideration into like the news that's relatively, like, let's say, not a like the highest priority, let's say like a CPI or an NFP, like aside from the other news events that are not like the big well-known ones? How do you view those in the market with your framework?
Yeah, honestly, the only thing I look at news for is manipulation. Like I literally don't care what comes out. I couldn't care less about the news. I'm purely just using it for manipulation. But unless it's a red folder event, I don't really pay any attention to it, if I'm being brutally honest with you. And the event itself, I'm only looking for it to create manipulation. Now I do have a model for CPI and PPI. I've developed 2 models specifically for CPI and PPI. But all the others I just primarily use for manipulation. This entry here today was super aggressive. I entered right in here pre-news, which is aggressive, right? But it's in alignment with my model. My model is fair value of an M5 BISI trading H1 to M5 model. So just anticipating this rip-off data. Now, that's a decision that I make as a trader, right? That I want to, I'm comfortable with that risk because of the gains I've made this week, right? That's a subjective question to every single trader. But for me, in terms of my model and where we sat on the chart at that given point, it was a straightforward trade for me. In terms of like orange folders with yellow folders, I don't pay any attention. The only thing I really take note of is when we're in earnings season, which we're now through. So if we have like a huge earnings, I don't know, like Apple or Tesla, which is dropping after market close, I don't trade the last hour of the trade day. That's just a general rule of thumb. And then on FOMC days, I don't trade between 11 o'clock and 2 o'clock. Like price just usually consolidates within that window. But apart from that, I just utilize news for manipulation.
That's awesome. We also got one other question over here is Ramsey, I guess, is specifying it's like more so about the daily bias from your indicator. So basically viewing the X levels through the higher time frame picture.
Sure.
So like how do you view that for determining your bias is more or less probably the question that Ramsey's looking to ask.
Yeah, absolutely. So I do everything through my sort of mechanical TS model, which is utilizing standard deviations, which I've taught in a previous episode. So I've basically broken down the entire model on YouTube. It's my mechanical TS model, which uses standard deviations, and we're always working with inside of standard deviations. There's also other factors on top of that, and the most important thing that I see that people overlook drastically is market profiles. Which can also be called as schematics. So it's a huge element in terms of trading. For example, today is a purge on the Asia high, right? So if you had your PDA up on this high, you're potentially trading a Judas. Well, if I'm trading a Judas, I want to be looking at the 15-minute order block underneath engineered liquidity. So if I was trading this, I would have taken it down to CE of this 15-minute order block. In the principle of trading the potential for a Judas or a sell day using the idea of a schematic. So schematics is a huge part of defining daily bias. It's massive, okay? And then you just want to know where you sit in terms of the higher time frame, right? So if we actually look on the daily where we actually keyed off from this morning, well, we actually keyed off essentially right inside of a premium, on the higher time frame here after distributing yesterday's PM high right at 62%, right in here, literally right in here is the very 62% on the daily. Okay, so inside of here is where you got breaker blocks, what have you, to trade continuation. Now you're trading a purge. Okay, you've got all this engineered liquidity. So there's so many factors that you can overlay on top of it, right? If you were sat up here and looking at on the hourly, well, we now know that we're in a deep premium on the hourly, deep premium on the daily. Standard deviation extension, this is a different topic, but now you've got the purge of the Asia high looking for price to run out the engineered liquidity. Like, this is all stuff that you learn as you go, or you can get someone to teach you. It's entirely up to you, but there's a variety of different market profiles that the market can deliver in any given day. For example, if you were trading this day, right, this is again another H1 to M5 model, what we traded yesterday. If you look at this sweep closes back above inefficiently delivered M5 range, M5 BISI. Right in here is H1 to M5 model. The same principle I'm always looking at. Okay, so you've now got your 1 minute DR and your 5 minute DR are essentially the same here. Okay, when they're the same, you're going to look to your 15 anyway. So when your 1 and the 5 minute DR is the same, you're going to look to your 15. So inside of here is my H1 to M5 model. Well, I just know that my dole is the 15-minute high. But you watch how this works. All right. Okay, so all the way back up into a premium. Okay, so this is 62% on the premium side on the 15. right? So we've now got a new 5-minute DR. When price is extremely bullish and it's already done its manipulation, it will go outside the premium side of a dealing range. Okay, so you can start utilizing the premium side of dealing ranges to go out, right? Once price has done its manipulation, and it is super aggressive. So again, same principle, you start looking for your PDRAs in the here to align with continuation, all right? As ultimately you're looking to come and drive out the 15-minute high inside the H1 to M5 model, right? That's just like a textbook H1 to M5, but being inside of London close reversal. Okay, so if you're trading a London close reversal, all right, which is 11:30, you're going to look for 50% of the daily range. Like that becomes your target. Like it's no ifs, there's no buts, there's no maybes. Okay, so automatically I'm trading towards that. So when you're talking about daily bias, there's loads of things that you factor on top of it. So in terms of where I trimmed yesterday, I trimmed at 50% of the daily dealing range because I'm trading a London close reversal. So what I'm always doing is getting an alignment with a schematic and overlaying XLevels on top of that, and then utilizing a model at that higher time frame PDRA in an alignment with an X level. And then I'm just scaling back through my dealing ranges. Okay, that's one example. Right up in here, H1 to M5 model on this day. Okay, so this H1 sweep, this H1 candle closes back below sell side. You're going to look for a 5-minute inefficiently delivered range, in this instance inside of a premium. So if we go to our 5-minute and we measure this range, so from this high to this low, okay, you're going to search for an M5 SIBI inside of a premium, and your entry is CE, right? Okay, and your stop has to go above that candle high. Okay, so where do you think I entered on this day? Okay, but where does this align with? You know, where does it sit? Well, if we go back to here, this was 29.9%, 29.5% on the 15-minute DR. So again, aligning with a higher time frame PDRA, X level, sorry. So look, right inside of here, we know that we're in a premium. We want to be going short inside of a premium. Well, we're inside of a deep daily premium. We're inside of an hourly premium. We're in a 15-minute premium. We've got an H1 to M5 model. Guys, what's the dole on an H1 to M5 model? 15-minute dole, all the way down here. Where do you think I TP'd yesterday? Again, if we just watch how this plays out, oh, it's way too quick. That was way too quick. Ooh, that was rapido. All right, so we know that we're in a higher time frame premium, 29.5% to the goddamn tick in alignment with 50% inside of our H1 to M5 model. All right, you watch how this plays out. 1-minute dealing range. So what you're going to anticipate is the 1-minute dealing range to break. Okay, that's what you're seeking for from your high time frame POI. Right, at which point you want to be mindful of where your 5-minute is. Okay, so what I do when I enter is I want to be breaking the 1. Okay, and that's where you can get your little 2022s. And then I'm going to be looking towards my 5-minute discount. Okay, that's the next place. Inefficiencies inside of a discount where I want to trim. Okay, because that's where you can get offset accumulation. Okay, if you're trading my discretionary model, this is where you can look to go short, and then you're going to target the 5-minute low. Okay, all inside of the principle of looking to get down to the 15-minute dole low. Okay, but let's just watch how this works. Okay, so you've broken the 1. Okay, boom. That's exactly where I'd be trimming, right? All the way back down inside of a 5-minute discount. So remember our principles, right? We're looking for 1 to break, and then we're going to be looking for our 5-minute discount, right? And then we're going to anticipate offset accumulation, and ultimately we're looking for a price to continue down to our higher time frame 15 liquidity pool inside of this specific model. This is a discount on the 5, 38% premium on the 5. So again, like you could start overlaying, like, okay, well, I didn't get in here, but I know I have an H1 to M5 model on the high. Okay, and I know that we're back inside of a premium. What model do I have in here where I could start looking to get in sync with this? Well, if anyone knows my models, right? Again, M5 SIBI. It's not an H1 to M5. It's a different type of model. It's a continuation model. But this is now aligned with being at 21% on the 15-minute. It's also in alignment with being 38 on the premium on the 5-minute. Okay, so a PDRA in an alignment with an X level. Bingo. Okay, so all the way now back into a discount on the 15. So this is now a high time frame POI. So again, you can get a pullback from here. Okay, but we're still doing the same thing. We're still just holding, but just scaling out as we move down to our objective. So again, you've now got a new DR. Okay, so again, discount premium. Bingo. So exactly 50-minute low. So H1 to M5, but scaling out using X levels from a higher time frame POI in alignment with an X level from a higher time frame premium, trading all the way back down to a discount. So we've gone from higher time frame POI all the way back down to higher time frame POI, 62% on the discount. There's loads of different things you can change with it. So you can change the way that it's presented. Okay, so you can either have it extend lines to current price or the right-sided widget, and then you can change the width of the widget to match other indicators, and you can also change where you have these delineations, these markings. There's also, because I utilize kill zones and opening price theory, there's also that included with inside this indicator. So that is these lines. So essentially your midnight open. So your midnight open in vertical and horizontal delineation. Okay, your 8:30 price, vertical and horizontal, and then your 9:30, and that's utilizing the principles of midnight open price theory, which is price being in a theoretical discount or premium. Yeah, and these are the kill zones in the background. So these different colors are your kill zones. So it's inside of these kill zones where I'm looking to trade. I just don't have kill zones beyond here, apart from lunch, because it's all just self-explanatory. You're basically inside the New York PM and London close. If you just understand the principles, it's basically advanced market structure, but it draws it for you. It really is that's what it is. Okay, it's aligning yourself with the institutions. So anything 15-minute and above is a higher time frame X level, and so I only trade from higher time frame X levels in alignment with a PDRA, and then I stack my models on top of that, and then I'm looking for range expansion from that point. Okay, but it's, you know, if you go back through it, it's how price moves. It just moves from a premium to a discount, going from higher time frame POI to new higher time frame POI. That's all it does. It's rinse and repeat. And then you just overlay your context on top and your models, whatever your models are. So you want to align your PDRAs and your models at PDRAs in an alignment with a higher time frame X level. So for example, the H1 to M5 model that I traded aggressively today, right in here, was at 62% on the hourly, which was at 21% on the daily. So I've got stacked confluences on the daily, but I have my model overlaid on top. Like, you can overlay any model on top. You don't have to use my models. Like, this is how price moves. So you can overlay any model on top. That's not the point. Like, you can literally overlay any model, and I guarantee you it's going to align with the next level. And it's so much so, if you're taking an entry and it's not in alignment with the next level, I'd be super cautious about taking that entry. Right? It's not good enough just for me just to say, well, there's an extension level, let's trade it. Right? You have to learn to stack stuff. Right? Stack confluences. The more you can stack on top, the higher probability your trade is going to be. Okay, so to give you an indication, I'm always looking at weekly profiles. I'm always looking at what's taking place. So that is like your Tuesday low of week, for example, Thursday rally, Friday decline, all that sort of stuff. So I always take into consideration what the current weekly has done and what am I anticipating to take place on that weekly candle. So this is how you start defining daily bias. Then I'm looking at my schematics. So there's a host of schematics and market profiles. Asia's London session Judas, New York AM session reversal, 2 p.m. reversal, 1:30 Judas, blah, blah, blah. There's loads of them. Okay, and then you want to get in alignment with those. Okay, because they will often depict what is about to happen in price. You can literally just trade schematics if you learn schematics, by the way. Literally, you could just trade market profiles alone. Okay, so if you get in alignment with market profile, then you start going down into your market structure. Okay, so what's taking place? Where do I sit on the higher time frame? Am I inside of a higher time frame premium to go long? Am I inside of a higher time frame discount to go short? Okay, cool. Can I trade a model in an alignment with a schematic at a higher time frame POI in alignment with the next level? If you then have standard deviations which relay on top of that, my God, are you cooking? You're cooking on gas then. Can you explain the tables, i.e. 1 weekly, daily, 1 month in your daily? Yeah, sure, absolutely. So I use this for higher time frame context. This is my monthly. So if I just expand this This is your monthly dealing range. So if you go to your monthly, this low which put in this high that closed above a former high is your monthly dealing range. Okay, this is your weekly dealing range. Okay, so I have the monthly, weekly, and daily on this chart. The weekly, all right, is this swing low that put in this high. Okay, that closed above a former high. That's your weekly dealing range. Okay, so all of these opportunities, by the way, is where I was going long and framing longs, shorts, in alignment with higher time frame POIs and models. Literally just been doing that inside of here. I mean, look how many opportunities you've had to take a trade simply just by dialing in using XLevels. Like there's literally so many. It's unbelievable. The amount of trades you can take is enormous. Inside of the weekly, you've then got your daily. This right here yesterday was 62% on the premium. So essentially all we did was we came from a discount on the daily and we just went all the way back up into a premium. All the way back down into a daily discount again. You need to be mindful of, and these are all little tips and tricks. We had an inside day yesterday. Inside day, 2 days after an inside day is when you get range. Tomorrow I'm anticipating price to either rip and close all the way back up into these highs because we've got divergences up on these highs. And we've also got weak highs. Weak highs are when price doesn't come back into a fair value of a dealing range. So all of this is suspect. And if we look up here, this is the hourly chart on the left hand side. We have a load of divergences up on the high in terms of ES taking out NQ's highs with dojis, and there's a host of contexts why price is going to drive back out through these highs. But for that, in order for that to happen, we have to hold the monthly fair value. If we break the monthly fair value, I feel like we're going to go on a carve. That's my higher time frame, so I utilize that for sort of wider confluence and context. And then for Dole, I use the hourly. Okay, so over here is my hourly chart. Okay, so again, you can see that we've just been operating inside of this dealing range. Okay, just moving between a discount to a premium, back down into a discount. Just consolidating inside of this hourly dealing range. So until that breaks or that breaks, we're just working inside that hourly dealing range. And we have our discount and we have our premium. And that's all we're doing. Just chopping, accumulating, consolidating ahead of non-farm payroll tomorrow, which is when I'm anticipating ripskis or dumpskis. 5 and 15 is actually the same here. Align it with this rejection block. Pay yourself inside of a premium, hold runners to take out the high. If this was your low that you're looking to hold, right? This is now a deep discount on the 15 and 5, right? 12% stack confluence, rejection block. There's your entry. Now you're scaling out, paying yourself inside of a premium, holding runners to take the liquidity, right? If that was your trade, right? Very, very simple scalp trade, even though this range isn't scalp at the moment. The range is enormous at the minute. All right, but simply using the principles of XLevels, like, you know, just that trade alone there, if you went from this 12% using this RB to come and take out this high back into a premium, you know, almost 100 points. 12% is a deep discount. 88 is a deep premium. So if you literally just have it as the backbone of utilizing it to dial in your models and your entries, that's how you'll get the best use out of it. Yeah, like if this was your low, like if you were looking at this low, I mean, look, don't get me wrong, it's, you know, it's gone off 70.5. That's absolutely fine. There's nothing wrong with that. It's just it didn't align with what I was looking for. Okay, and you know that's sometimes the cost of precision. Like I have to have my low. I'm a primary entry trader, so I like to enter right on the low. Okay, and then I scale my positions. So with that S&T that you had down in here, but it was the wrong type with ES, Super, and NQ. I didn't want to take that entry long. I wanted one more sweep lower. So that's absolutely fine. There's no problem. But in hindsight's 2020. The same principles. If this was your low that you're looking to hold, fine. Different model to me, but that's okay. But 12% deep discount, rejection block. All right, you just go in premium discount. You know, if you're long, go long in a premium. Pay yourself inside of a. Sorry, go long in a discount. Pay yourself inside of a premium. Hold runners to take out the high. You know, that's absolutely fine. But I just hope when you see it and you're watching this print, you get an understanding of what XLevels actually does and deliver. Yeah, so you want to be mindful of fair value on the hourly. So if I was in this trade, this is where I'd be looking to pay myself. right back at fair value. So again, same thing, looking for PD arrays up inside of here to support or why price will hold that high. Again, you can start looking at your deviations and what have you to overlay on top of that. But it gives you a framework for how price moves, right? So I'd only be looking for longs inside of a discount, right? Throw on the context that we had no sweep pre 830. We're only looking for bullish price, right? We are only looking for bullish price. Today, in this occasion, I didn't get my entry. I wanted one more sweep lower to then drive higher. That's okay. The principle, though, is you're right in terms of directional bias, just missed the entry. That's okay. Right? So 70.5, if this was your area inside of a discount, this is where I'd be paying myself, right? So fair value. At this point now, you're just holding runner. So my original target today was 500, back at 500. So if you go to your 15-second chart, you've got a void at 500, which is right in here. That's my objective for today. So if you're holding runners, which is essentially going to take you all the way back up into a premium on the hourly, so 38. So that's going to be it for me today, guys. Take care. Love you all. And if you need me for anything, just holler. All right. But take care, guys. Look after yourselves.
Take it easy, everybody.
But be good.
Appreciate you being here.
Take care, guys. Bye-bye.